My name is Charles Miano, Senior Investment Analyst, Nabo Capital, and I'll be giving you today insights about dollar investing. The dollar, among 185 currencies in the world, is the number one currency. And the reason for this is due to many reasons. One of them is the fact that it's the most traded currency in the world. It's quoted in all trades or significant trades in the market, including oil and other foreign currencies. But the second thing is where the dollar has come from. And I'd like to just give you a bit of a history lesson of how the dollar started. So the dollar started back in 1914. That was the first time it was printed after the formation of the Federal Reserve, which is basically the central bank in the United States. So the dollar gained prominence, especially after World War I or during World War I. At that particular time, majority of the currencies at that particular time were pegged to the gold, or pegged to the gold standard, that is. So every currency was tied to gold. And then during World War I, many countries had to borrow quite excessively, as well as they had to print a lot of currency to fund machines, to fund supplies, in order just to facilitate the fighting in the war. So the US came into the war much later, that is World War I, and about that time many of the currencies had to sort of back off from the gold standard to allow them to print even more currency. So moving on to World War II, in this case the United States also joined the war much later, and by this time the United States had gained some prominence, especially by supplying weapons and other supplies to other countries that were fighting at that particular time period. And by the time that they had joined, many of the other countries at that particular time had used a lot of the sort of gold in order to fund the weapons that they were buying, and that gold they had transferred it to the United States. So by the end of World War II, around 1944, United States had the most golds in the entire world, and there came a conference, the Bretton Woods conference, that happened in New Hampshire in the United States, in which 44 countries agreed that the US dollar will be the main currency in which all other currencies in the world will be pegged to, and the US currency will be directly tied to gold. So at that particular time, 1 ounce of gold was equal to about $35. So many of the currencies at that particular time, they would basically fix their exchange rate equal to what the dollar was. So meaning that whatever the price of the dollar will be, they will be moving it at equal adjustments. And at the same time, if they wanted to exchange their dollar for gold, the United States will facilitate that. So from the 1940s, moving on now to the 70s, what happened was a lot of dollar was in circulation all across the world, and it was reaching a point where the United States was fearing that if everyone came and said, hey, I have so much dollars, and I'm scared that whenever you have so much of a currency, a single currency, inflation tends to go up. We've seen similar cases with countries such as Zimbabwe. We've seen similar case happening to a country currently right now, like Venezuela, where the inflation shoots up astronomically. And so during that particular time, the United States feared that if everyone comes and says, take your dollars and we want gold, the United States didn't have enough gold to pay every other country for the dollars that they had. So what happened is in 1971, President Nixon at that particular time basically severed the tie between gold and the dollar, meaning that it was the end of the gold standard. So that means you don't really need your dollars to be tied to gold. So I can't come to say the United States central bank or the Federal Reserve and say, hey, give me your dollars, give me your gold, and I'll give you the dollars back. So from that point on, basically the dollar just became basically the supreme currency, and that's what we have today. It constitutes about 60% of all debt in the world, meaning that all foreign banks across the entire world have to hold dollars in order to lend that particular currency. And also it's the number one currency when it comes to global forex reserves. It's number one with all countries holding forex reserves of about 62% are held in dollars. The second currency that is most held is the euro at about 20%, and the third one is the Japanese yen, held about 5.7% as at the beginning of 2020. So that gives the dollar quite an amount of strength when it comes to global currency transactions, when it comes to trading, when it comes to payments, and also when it comes to being a safe haven asset. So the US sort of financial market is the largest in the entire world. And even the size of the economy is one of the largest in the entire world. So that gives confidence to that particular currency. And that's why it's very important for us to have this discussion with you at this particular point in time.